So I had a couple of questions for a few people. How do you spot gaps in a chart, right? So every time you sell off, you open up lower based on futures, right? You see, you always have these gaps in between the charts. It's simple, just looking at the gaps between the candles. So you have it open, opened up like around 400, and then you saw it gapped all the way down here to 395, and then down, and you have this space in between, right? So that's pretty much what it is. You're just looking for the gaps to fill. So right there, SPY, right? There's a gap there, gap right there. And now you are filling this gap right here. So that's what we say when we say gaps to fill. So you go down and it's gonna fill the gap to come back up. I always feel a stock like SPY is gonna fill the gap on the chart. One second here, guys. Okay. So that's what we're seeing right now. The market's not just going to go straight down unless you get a flash kind of crash where it's like the econ, something like 2008, right? It's just crash. You're going to wake up and trading is going to be paused, and you're not going to be able to trade. But with a sell-off like this, you're going to start to fill the gaps in the chart. So that's how you find the gaps. Just go on the daily and you find the gaps. You have to use the daily chart to find the gaps. If you use Heikin Ashi candles, right, it's easier to trade with Heikin Ashi candles, but you're not going to see the gaps in the chart with the Heikin Ashi candles. You have to use regular candles to find the gaps. So SPY daily here, right, you have this descending resistance here, right? Just take it from the peak here, draw the line, come on down. You can see why, right? Resistance is right here because now you're having this descending resistance line here. So once you break above here, right? So that's 390. We topped out at what yesterday? 390. Let's see. So 390, that's resistance there. We break above 390. 395 is next. So that's why I sent out 395 calls to hold till the 5th, because we're looking for this now to fill this gap here to 395. And it could go to 400. So you could fill the gap all the way to 400. And maybe you could touch 410. It depends, but I don't think we're going to go to 410. I think we're going to go up to 400 and then stay in this area right here. And maybe CPI that comes out in July, you probably have another gap down to 350. And then maybe the market bottoms there at 350. I was reading a lot of people are thinking the Feds are going to do the last rate hike in July. So after that, the market's going to have a chance to be, I guess, somewhat bullish if they stop in July. Because the thing is that they did it with 75 basis points this month, right? It's not going to take 1 month or 2 months for it to work. You have to give it time. They can't just keep going and going with 75 basis points and not give it time to work. You have to kind of ease off and see in a couple of months if I'm going to help inflation. So the market will probably like that. And then I guess they have a year-end target for SPY like around 430 or 440. So maybe you push up there to 430, 440 to end the year. I don't know. I would just wait as the day goes by. But you can see a lot of volume came in those past couple of days, right? 1, 2, 3, 4 days. And how to know that we were going to gap up this week, right? You had a little doji right here, a hammer, right? And as soon as you start with this flat bottom green candle right here at 381, once it's flat, you're going to gap up. It's really that simple, right? Just like here, you see the same thing here, right? A hammer or doji. This is more of a doji right here. This is like a hammer. Almost a doji, but a hammer. The flat bottom green candle, and you're going to start to gap up. It's really that easy if you kind of look at this here. You also have this trend line here. You can also connect from here. These are the points right here, right? You can see you start to come down in a descending wedge kind of pattern here. Now, what are descending wedges, right? You connect there if you want to. In this descending wedge here, that is a bullish pattern right there. You're going to break out of this wedge. Same thing that you'll see right here, right? descending wedge, you kind of come in here and you trade and you push to the upside. That's just how the market is going to move. It's going to move in patterns just like that. You kind of have another one right here as well. If you kind of
Okay, wait. Don't make a miss.
but
On the store?
there, right here, right. We have a lot of descending wedges in there, and you start to break out to the upside. We're just not going to go straight down. Remember, I said the only reason why it's playing spot based on only one technical indicator that I was using, that I was watching, was the RSI. SPY at 30, one RSI, it bounced every single time. If you look at this line here going across, right? Yeah, you dipped it down under here a little bit, right? But look at this line right here. You go straight across and it pretty much bounce here every time right there. So it's really safe to buy the SPY at 30 RSI. And you can see it came down and it bounced. It started to curl back up. So you have room for it to curl up to 54, and it may get reduced before maybe, yeah, like 90, like 395, 394, somewhere around there, because we're at 50 pretty much. You get to move to 50, 55. So that's SPY. And also if we take a look at like a 1 hour. If you take a look at trying to see if I can make it really perfect here.
Okay, don't look, Lilo.
All right, so if we take a look at the 15-minute or 1 hour, whatever time frame you go on, right? What do we know about
City? This is the guy that I follow. I'm in his Discord chat. And this is what he does. This is how he makes the calls and the puts that he puts out to us. He reads patterns in the stock market. It's like reading the matrix.
So it's like right here, right? The 15-minute, this was on the 23rd. We had what, for you guys that have been here for a while, what kind of pattern is this right here? Right, so that is a pattern right there. Does anybody know what pattern that is?
Higher high or something?
No.
Bull flag?
No. So remember, you have your neckline right here, right? This is your
Be an ascending triangle.
It looks like a triple top by bouncing 3 times.
No. So remember, what pattern has your left shoulder, your right shoulder?
Oh yeah, inverse head and shoulder.
Yeah, it's
now.
shoulder. Right. So your head right here, your left shoulder, and your right shoulder. So that's an inverse head and shoulder. What happens with an inverse head and shoulder? Right.
It pops. It looks like it pops. Did
Exactly.
a nice little gap up right there after the right shoulder.
Exactly. Exactly. So you have an inverse head and shoulder there on the 23rd.
So what is the current pattern right now, Miss, for next week?
Well, hold on 1 second, guys. The guys at the Navy are trying to have me muster. I'm like, dude, I'm on terminal leave. I don't have to muster. Hold on here. They were calling me.
Who's getting after you?
The duty section. I'm like, dude, I'm on terminal.
Oh, duty section.
Yeah. Yeah.
Hey, look, while he's doing this Zoom call, the Navy is calling him. Somebody needs to get a duty section master. This dude has got out of the Navy, Sydney. Exactly, idiots.
Yeah. So, yeah, the head and shoulder right here, and inverse head and shoulder. Sorry. So we know inverse head and shoulder, right? we're gonna move to the upside. Head and shoulder, you're gonna go to the downside. So the head, it would be inverse. Let's move this line here. So
It also looks like if you draw like a line from the first green where it popped, almost like a vertical. I think
yeah,
it's almost like following a trend, like it bounced
Yep.
off.
exactly.
Yeah, if you connect that all the way up, yeah, it looks like almost like a little
Right.
lower.
Yeah, a little lower, right around here. Then bring this down a little bit.
It looked like it kind of was hitting the trend.
Yep.
Almost.
So it tried to follow out the trend. I mean, it tested the trend right here. So you bounce here, right? And you come down. So I was going to test these trend lines multiple times because that's trying to test it for it to continue the uptrend. At the first test right here, right?
Yeah, I could see people getting shaked out right there though, because it did look like almost like a double top.
Yeah,
Almost like a double top.
exactly. So you have a top here, 1, 2, 3, right? So you run into resistance, and they're trying to shake you out at the same time by trying to test this uptrend line here. So you have the bounce here, right? Then a higher low right here. Then over here, you still
It's
have
like a double bottom, huh? It looks like almost.
bottom, almost right there. Well, if you look across to you draw a horizontal line here, right? When you come down here, so let's remove that right there. You draw this line right here. Draw it at the bottom here. It runs
I
into
don't know if it's a good pattern, but like you know how so you see how it kept hitting the top. I don't know. It kept hitting. What is that? 378. It kept hitting. It looks like it kept right there.
Yeah.
Is it true though? Like I heard, like if it keeps hitting the top like that, it wants to break. Like it's gonna like hit it, boom, and then it's like it's gonna come up. You know what I mean? It's gonna break through. The more times it keeps hitting the top.
Yeah,
like
that's
that.
exactly.
Or is that super risky? Is that not like a good high probable play? Because that's what I learned in like Forex trading. This guy was like, oh, the more times it keeps hitting like that, it looks like it's gonna bust, bust over. But
Yeah.
I don't know if it's like a high probable.
That's exactly what happens. It's just like support, right? You're gonna test support. So first you have this bounce right here. This is what started the trend. This is where your trend started. First you bounce here, then this is gonna come up and it's gonna come down and test that trend right here. It's pretty much testing support or testing the continuation of the uptrend to see if this uptrend is gonna be valid. So you're gonna come up, it's gonna sell off and test this line right here, because you could have drawn this line right as soon as you saw this bottom. You could have drawn this line and just left it like that before this piece of the puzzle even happened, right? So even when the second piece of this puzzle happened and you're like, okay, I could connect here and I could connect here, your line is already going to be running up here before this day or this day even happened, right? If you extend that trend line all the way up, and that's how we know where they're trying to push the stocks. It's the same thing with penny stocks, right? If they're going to short, you know exactly where they're going to top out at and where shorts are going to come in and try to short.
Is that the hour chart too? Or what?
This is the 50. I mean, 50. Yeah. So you have, yes.
Yeah,
you
they got some green right there. You would have caught that off that trend bounce. You would have got a little green.
Yeah, exactly. That's why I played 380 calls, right? We had 380 calls because I was like, okay, I started seeing this inverse shoulder started to form here, and then you started to hit that 378 area.
Yeah, you're a wild man. 3-day calls. Woo.
Yep.
But it looked like the puts already. It looked like they were done. It looked like it was about to pop. It dropped so low.
Yeah, we got puts. We caught the puts as well for 100, right? And multiple times. Woke up to a couple of nice puts in the morning, but after a while, as I said, you have to look at the daily. You have to look at RSI. The RSI is the thing that I used when we were down there in that 360 area to say, okay, let's switch over to calls because
that was a big drop right there. Yep.
Right, exactly. So it always bounces at that 31 RSI. If you look at it all the way across, it always bounces at the 31.
Woo. You caught all that too, huh? That was nice.
Yep. Let's see here.
Are the calls back now? Are the Bulls making a push? Because it looks like just looking off that nasty gap down and that super red. To me, when I see super red like that, I think it's like, oh, the put's already done. You know, it's already.
What's my gold range?
Yeah, you had a drop, from 417, right, all the way down to 360. That was a 50, 60, almost a 60-point drop. Yeah, 60 points. So in what, 1, 2, 3, 4, 5 days? It's gonna, if you have puts down here from here to down here, you should start to close them out, because at that point you're gonna start getting greedy if you get a 60-point drop. It's just not
That
gonna
was a monster move right there. Was it like 500% right there?
that's more than that. If you have puts from down here to 362, you're talking about 3, 4, 5,000, 6,000, even more. Yeah, if
And
you
then
look
with
at-
that RSI hitting the 30, and then you just kind of like look at the TSI to see if when the MA is kind of about to switch. Because sometimes you get the RSI 30, it's not at the bottom yet, and then you lose a little bit. But what I use like the Robinhood paper trader. I'll use it as like a card counter. I call it the card counter. So what I'll do is like when I'm ready to like at that situation where it's RSI 30, I'll buy a contract that I think I want to buy and wait for it to see if it starts to go a little green and then jump in. So you don't
Right.
get that red. Because that happened to me last week. I caught a big flush on I think Meta, but because they're so out of the money, it hiccuped a little bit. So it kind of threw me out. But
Right.
almost caught all that puts right there. I almost caught all that on Meta because I think Meta's pattern is almost the same too.
Yeah.
So
That's
I
one
was
thing.
like Meta, load the tub, puts.
So, what do you think next week is going up?
I gotta open the door.
Yeah. I think we're gonna go up next week to. I think we're gonna fill that gap to 395, possibly 400, and then that's when I'll look to put to take puts, because I
Okay.
think you have 4th of July coming up. You may get a green market going into 4th of July just to make people happy. So you may see 395, 400, and now
good, right?
puts around there because we know they're gonna do I think they're gonna do one more hike in July, and then they're probably gonna ease off of it for the rest of the year, because you have to give it time for it to work. You can't just hike and not give it time. It's gonna take a couple. That's gonna happen, week after they do the hike, where you see inflation. So if they do it in July and then August, you see some kind of inflation coming down, then you can expect the market to rally. As if inflation comes down, even under 8, it comes down a little bit, say 7.5, the market's gonna literally become bullish. It just needs to come down.
Put our seatbelts on.
You take a look here too. So we delete this line right here. We delete this line here, giving us the descending wedge, right? So this is the trend line that was telling us that SPY was going to come down to 3, right? 360 was pretty much the bottom for now, because this trend right here down, right? So 360 was pretty much the target, but you bounce at 362, close enough. Yeah, this line right here. So this is the channel that you were in. You were in a downtrend channel, right? So traded down in here for a little bit. You can see you broke up. Couldn't continue at 417 here. Just wasn't enough buying pressure. It was more selling pressure than anything. And you can wrap on the side of this channel. Now what happens, you break out of the channel and you can see maybe up here to 400 where we come and kind of hang out here at 400, just like we hanged out here at 415 and then down. Or now what happens when you start to go down a little bit more, this line is going to extend down a little bit more, and based on that, 350 it's more than 3 here, and then now to fall down, and we're going to follow this line over here. You can see this line, once we start to pull it all the way down, you can see how we're going to get that 350 target. That's how we're going to come down and bounce at 350. Kind of makes sense. We'll pull this down straight down to 350 here. That's how we kind of see it. You see what I'm saying, right? 400, same thing as there, down, and then 350 would be your target. To the left, 350 ends up with support all over the right? You have support over here at 350. Look over here too. You have some support. A lot of support at 350. Bounce multiple times. Where right here you got a bounce here at 350. And 350 would be the bottom target, and then after the rate, the inflation starts to cool down, and the market probably pushes back up towards 400. So I would wait for puts up at 400, and possibly if you want to wait just a little bit, wait for it to come up to 400, and then start to break below this 390. I think this down. This would be the main confirmation of puts, right? Sell off back into this downtrend channel. Get you down maybe 380, 370 to come back to this channel here. You're still money going down to 350.
The what?
Yeah, because that looks like a thick candle too. The bull. It looks like almost a. It's a. You know what I mean? The last candle, the very last one, the green one.
Oh yeah, this is a lot of volume on Friday. You had 106 million shares, and there's a green bar right there. So you had a lot of buying. But yeah, it's the same thing as here, right? You have volume here, and then you wait for CPI. That's what they're doing. They're at the end, the beginning of every month, right? You have that push up towards the big. This is May. First, the second week of June, CPI, then sold out. Now we're getting towards the beginning of July, into the second week of July. You gap up, and then CPI inflation comes in worse. We're gonna go up. Inflation comes in higher after the stat 75 basis point hike that we just had. There's no if, buts, or maybe. So that's that right there. That's pretty much SPY in a nutshell right now.
Damn.
So can we go for 400 call July 1st?
Yeah, you can go. You can go for a 400 call July 1st.
Okay, thank you.
Yeah. I think we're gonna get up there to that 395. Did we hit 395 on Friday? I think we did. Okay, so we got almost 390. So 390 is
390
exact 390 cents. Yeah, 390.09 cents. So yeah, your resistance right there at 390, and that was a lot of volume right there towards the end, probably like 7 million. Okay, 5 million. I haven't seen this in SPY in a while. Every time we've even had put right that sell off right into close, kind of and then once it gets there, kind of sells off. This one ripped on right. How you know, right, where we're gonna pop out on Friday? So let's see. We could use the 1 minute chart here. Always a trend. Always a trend and draw exactly what those right. So just by looking at this right here, right? See, just look at that right there. Everything. If you just touch the peak of all this peak right here, right? Just run that line. You see here, this right here. This is your trend, right? Touch that line, gets rejected. So that's 1, 3 times, 4 times, right? So that's resistance right there because we're trying to touch that up line, and we break above it right here Friday morning. So Friday morning, if you had this line drawn on your 1 minute chart, this would be great to take calls right here soon, because you know that we're breaking above ascending resistance, right? Because this is an ascending line right here going up. So as soon as you broke above here, you enter calls, and guess what? You enter your calls. You didn't take profit. You wait for it and see if it's going to bounce on this line because look, that line continues all the way up and it bounces here, right? This is not a coincidence, right? Your trend line is telling you the trend of the stock itself. So it bounced there 1 time, 2 times, 3 times, right? 4 times, and it came under for a little bit and tried to reclaim and got rejected. And then eventually it reclaimed right around here and it just kept going and going and going. Right now, this, let's see, this, and you extend this all the way up. All right, so you can leave that line right there, and this is going to tell us on Monday what's going to happen. If we keep above this line here, we're going to go 395 and possibly 400. So you can use your 1 minute as well. It's not perfect. I have to redraw this piece right here to make it more, but that's just an idea, right? Just a way to show you how the trend actually works. You take a look at there. They're gonna kind of have the I think I'm not sure why it's not pulling up Facebook chart. Something I don't know about it. Amazon in a follow spot. You can see it, same thing, right? Holding above, popping it towards the end of the day. And you have the FANG stocks, Apple. Pattern's gonna Apple was on a VWAP, well, surprisingly, pretty much the whole time. So like we had those 140 calls that were expiring on the 20th. I think they were the 27th. Right? So we told them a long time ago, but you kind of see you hold it, or it's super hard for you to hold. How them a lot, 500, 600, 700%. All right, 140. But anything gives you 100%, I would just say go ahead and take. Just like the spot yesterday, kind of hit off market open. This way, if you guys realize, I didn't say take profit at market open because like, okay, let's just hold off on this one for a little bit. But maybe some of you guys market questions in the Discord because I was watching market open. I wasn't paying chat. I just kind of said, let's just take profit right around here. Once I saw this candle here, and they went up.
Hey, wait.
I know a lot of people probably got hurt on Rev. If you didn't wake up in the morning after we traded, that's a thing as well. First swing trade, you want to have a broker that you can wake up at a.m. which 1 a.m. Pacific time, and that is going to be 4 a.m. Eastern time. So Rev, right? Click the swing trade around not here, this day, right? So this is where we got in right around here at 7.92.
Yeah. You
So
can.
other
We're going to start together. Yeah.
so here's some.
Oh man, just your ball cap. Get the fuck out of the way.
All right, so it's talking about a ball cap. All right, so Rev, right? Swing traded Rev. First of all, if you're gonna look for a stock to swing, whether it's a penny stock or anything, first thing you have to do is check the daily chart. So this stock has been hot, right? Because if you're not aware, Rev is Revlon, the makeup or the lipstick company, right? And it's they filed for bankruptcy. So every time a stock files a bankruptcy, it's going to gap down. You see here, it went from 4 all the way down to $1. So as we all know, the market's been a meme kind of market for a long time. And Revlon, it kind of fits into that criteria of where it's a retail store, right? A GameStop, people love it, something like that. So people that saw that this was heavily shorted for one, right? And then they kind of realized that this was Revlon, the company. People love this company, right? What happens when they file for bankruptcy? Possibly they could be bought out. Maybe Ulta. We know that Ulta is a stock
Short,
that's
short. They're saying if they go bankrupt.
300. Yeah, bankrupt. They
Can
filed-
you anticipate that they're gonna get bankrupt and apply puts or no?
No, you can't, because that news is just gonna come like in the morning or in the evening, whenever the company tells the SEC, they're gonna file a bit like I don't remember what the form is called. They're gonna file a form. You can check the forms on what is it called here again? Let's see here. It's called
So how fast does it reflect on the chart?
Oh,
on the
it,
market?
like instantly. As soon as the algorithm sees that news comes in by the company, it's gonna go down instantly. So if it's a
Like,
trading,
does it go down slowly, like gradually, or just instantly, like
uh,
skyrockets down?
it skyrockets down.
Oh.
So that it will drop and then it halts down. You have the volatility halt. So you see this drop here from 422,
Right.
dropped all the way down to $1 to $2, and then after that, you continue down the next day to $1. So if you
But
were
that's
in,
on a daily chart.
yeah, so daily chart is going to show you a 1 day time frame, right? So this candle is 1 day. So that's what it means by daily. So on the 10th, it dropped from 425 all the way down to $2. And then on
Mhm.
the 13th, it continued down from $2 all the way down to $1.
So it seems like an opportunity to like you know that's gonna go back up. So you can put some calls in there, right? Or you
Don't know
just
that.
follow the news.
Yeah, you follow the news because when a company files for bankruptcy, that means all the investors, they're just going to dump their shares, because when a company files for bankruptcy, they no longer meet the requirements to stay on the stock market, the NASDAQ, whatever part of the market they're on. So they're going to get delisted. What happens when they get delisted? They go to the OTC market, which is over the counter market. And that's a whole nother different market. And there's a lot of scams in that market with fake companies and stuff. You don't want to trade in that kind of market. You can trade it.
Right.
Yeah, but it's an OTC market. So they're usually going to be really cheap when they go to the OTC market. It's going to be 0.00 whatever they're going to be selling for. So you could buy 100,000, 200,000, 300,000 shares. It's not going to cost you anything, and maybe hope that one day this company gets bought out by something, or it comes back on the market and it goes up and you make millions of dollars. But that's just hope. That's not going to happen. Chances of that happening for you is going to be very slim. It's kind of like Dogecoin, right? Was selling for super cheap and a bunch of people loaded up and then it just took off and made millions. Some people didn't sell, some people sold, right? So, but that's what will happen with this company if it doesn't get bought out. But this is a very popular company. Now, as soon as they filed for bankruptcy, a couple of days later, Reddit saw it, right? Saw that it was heavily shorted. About 45% of the float is shorted. If you guys don't know what the float is, that's how many shares are on the market for us to trade throughout the day. So this stock has a float of 10 million shares, then 3 million of those shares are shorted. So it's like around, I think it's like, no, the float is 7 million and 3 million is shorted. So you only have 4 million shares left out there for us retailers to buy. So that's about 45%. So half of the float pretty much is shorted. Now what that means is that there's a lot of shorts holding positions. So now buying pressure comes in and people start to buy it up. Shorts are going to have to cover their position. When they cover their position, it fuels that buying pressure. So when I cover my position, however many shares I have, right? When people start to buy the stock, they push it up. When you cover your position, it registers as a buy order because you have to buy the shares back. So that starts to increase the short squeeze potential. And that's why you see this went from, let's go to the 15-minute chart here. So this goes from $1, right? Look how fast it went up. So if you're short a bunch of shares, and this happened to me before with a stock like this, right? You're short a lot of shares. Look, this happened on June 13th, and it went from $1 to $9 on June 22nd, and that's not counting the weekend, right? So you have how many trading days of this? You have 1, 2, 3, 4, 5, 6, 7, 8 trading days for this thing to go from $1 to $9. So if you're short anywhere here, you're gonna just get squeezed and squeezed. And at the same time, if you're short and you start drawing your trend lines, right, you're gonna see the trend. And what happens when you see the trend, what shorts do, right? You're gonna see this trend right here. So just connect this here. You see, this is how you short. So if you're short, you're getting squeezed and you're trapped, right? You're trapped in here. You add to your short position in resistance, like here. This is where you would add based on your trend line. So you add shares here, right? It comes down. You're still probably negative because you're short around here. You're breaking even, but you've paid some borrowing fee to hold overnight. So you're like, man, I'm gonna hold my short position. Then it gaps up and it hits resistance here again, and it hits, and now you start getting squeezed, and you're drawing more trend lines from. Let's see, get one right here, right? So we start to get a trend line here, and then as a short, now you're going to start to add more shares into this position here to increase your average, right? Because you're like, man, this thing just went from $1 to $4, has the pullback, and then it comes down just a little bit, but not enough for you to be making money from your short, right? And then it holds that line right here, and then it rips again, and you keep adding shares, and you're like, well, it had stuff 500-600% in a couple of days. It has the pullback, and then this thing just keeps going, and you keep see how it rips, and you have a lot of shorts that lose a lot. And that's happened to me a ton.
Wouldn't you just have given up at around, like, if you were to short, I don't know what day this is. Like, okay, so the first short, wouldn't you have like given up once you've seen that it was gonna go in an uptrend?
Well, that's the thing. You don't know how long this uptrend is going to continue for, because the thing is that if you short, you short around this $2 area, right? And it came from $1. You're like, well, it still has like 50-cent downside. So 50 cents is a lot for trading to make profit. 50-cent profit is a lot. So, you start adding, and then like I say, okay, you have $100,000 account, right? So let's say you short 10,000 shares here at, $3, right? And it goes down to, $1.69. You're like, okay, I'm good. I'm not going to cover my short position because I'm good. I'm making a lot of profit here. Let's just wait for it to, go down even lower, right? And then it pops back up and it goes up here. Now you're breaking even on your short. You're like, okay, well, I'm breaking even at this point. I'm still good, right? Then the next day it pops up here now to 477. You're like, well, damn, I'm losing like 20 grand right now from my $100,000 account. You're like, okay, let me hold it for a little bit longer, right? Because I'm only losing $20,000 from a $100,000 account. You're good. Then this thing pops and starts to rip up here at 6. Now you're short at 3, and it's at 6, 10,000 shares. Now you're losing 30,000. Well, this is where it starts to kick in. You're like, oh man, I don't want $30,000 from my $100,000 account. Let me hold for a little bit longer. It's just like going long. When you go long and it's short them and they pull them all the way down, you're like, man, let me hold a little bit longer. Let's see if it's going to bounce back up. It's the same thing as being short. And then, they just keep ripping and ripping against you. You keep adding shares, and maybe if you
lost.
And you lost, right? And the thing is that when a stock goes from $1 to, let's say, almost $10 in a couple of days, short interest on this is going to be extremely high. So now you're losing, pretty much half of your account up here. And then now you have to pay the borrowing fee to hold it over now, which is going to probably cost you a couple $1,000s every night for you to hold it. Now it's super expensive because everybody's trying to short it now that it went from $1 to $10, because there's a lot of room down back to, $3-4, right? It could give up 50%, half of what is made. So from $1 to $9 is what? That's how much percent? Like, I guess 6, 7, 800%, somewhere around there. It can go back down to 400, 300%. Wow. A lot of people want the shares to short, which increases the cost to borrow, and then that kind of screws you over really short down here, and you're just like, well, I have to let it go because the borrowing fee alone is going to completely wipe your account out.
Wow.
So
couldn't you just scalp?
You could scalp, yeah, but it also depends on the cost to borrow, right? So if you short 10,000 shares and it's costing you say $3,000-4,000 to short, you need at least a 70-cent drop, because with a 70-cent drop and you have 10,000 shares, you're going to make 7,000. If it costs you 4,000 to short it, you're only going to make $3,000 profit. Right. So it depends on sometimes the cost to borrow. You have to look at it like, well, cost to borrow is fairly high, but if I get this much drop on the stock, then I could get out of my position with a decent sized profit. But this is how you check to see what a company files for. You go to, this is free, BAMSEC. You just click on it right here, ticker or company name. So we'll take a look at Rev, right? These are all the forms. I used to remember what all of them meant, but I forgot at one time. So S3, this is a shelf registration. So you can see here on March 31st, they filed a shelf offering. So they have a offering on the table. Now that the stock has went up from $1 to $9, you run the risk of the company doing an offering. What that means is that they're going to dilute the company. They're going to sell shares for investors out there that think that this company can come back, and they could drop an offering at $3 a share, and this thing is going to drop. You're not good if you're in long here, right? That's another thing with swing. Everything that you trade in the market is extremely risky because these companies file for offerings, right? You could be sleeping Sunday night and wake up Monday morning to this thing down from 8 to 3 because the company decided to sell, or they did to dilute the company at $3 per share. And if you're in up here, you wake up in the morning, you're not going to have a chance to sell. It's already going to be down at $3. As soon as the pre-market opens up and that offering comes in on a Sunday, it's going to be a big red candle all the way down here at $3, and that's it. And you're going to get screwed pretty much. So they filed an offering right here. You can see for 75 million shares. You can go through it and you'll read through it, and it tells you exactly, when they did it and all that good stuff. So that's an S3. That's the easiest one to remember. S3 is a shelf registration. We go back here. You can see they just did the bankruptcy. Let's see if we can find it here. The 23rd, right? So the 23rd, you can see here, news that came in on the 23rd, right? They did a material definitive agreement, new financial obligation. You can read into it, tells you exactly what they did. So they paid off some debt with a foreign ABL credit agreement, right? They paid off some debt that, I don't remember exactly what it is, but this is what came in on the 23rd. Now, when that came in on the 23rd, right, people got excited, right, because it happened on the 23rd in after hours, and you see what happens in the morning, right, on the 24th. People got super excited because they paid off some debt, and look at that. You have this move here. This is when I traded it yesterday. So even though we swing traded it, this is what I was going to. When we swing traded it, I saw we had support here at 7.82, right? Look at that support here at 7.82. You have really strong support. That's why I was like, okay, I'm in Revlon at 7.92. It held support. This is what I'm looking at. Now we go to the daily chart, right? We're going to look for 7.82 on the daily chart. Let's see if we find it here. This
Looks
is
like they did like SPY. It looks like almost like how it shot up.
right. So look at 7.82. You bounced here at 7.82, double bottom, right? You had support here at 7.82. This was a long time ago. This was in April, right? So when I look, first thing you got to do is look at the daily chart, find the support areas, find the gap up areas. So if it clears that high that it had at 9.89, what is your next target? This is your next target right here. And this is how traders trade, and this is how they try to move the stock against whoever is shorting and try to fill these gaps up here. So room from 9, when you get over 10, a stock starts to completely open up when it gets over 10. $10 is when you're pretty much, $5 is when you're no longer a penny stock, but when you're over $10, that's when everything starts to change and momentum starts to increase way faster than when it's down here below $10. So you can see why the shorts that shorted it didn't want it to go above 10, right? So as soon as the volume came in here, you had a lot of sellers here and a lot of shorts. And this right here is where you have that bearish, that top and tail or that shadow candle, right? You can see how it's super thin right here. That's just a wick. It's a lot of selling right here. So shorts didn't want this to go over 10 because if it went over 10, you're gonna have a lot of people getting squeezed, a lot of people accounts getting blown up. So that's why I said took an entry here. And you can look, we took an entry here. If you have Webull or Trade Zero or a bunch of other brokers, instead of the traditional brokers like TD Ameritrade, E-Trade, Fidelity, Schwab, those brokers, they don't open until 3 hours later than the other ones. So if you had Webull, you could have sold this right up here over 9.25. So 7.8 up to 9.25 is where we went that day after I sent out the swing trade, went up to 9.25. And then it came down, and you can see it sold off, right? But you can see it held that 6.5. It would not go below 6.5. And I was watching this in pre-market, and you can see here, this is what you have to watch, right? So 1, 2, 3, the triple bottom right there at 6.5, and then the news came in, and it was on short sellers restriction on Friday. So short sellers restriction, that's when they cannot short the stock in the uptick. So we go to the 1 minute. When the stock is moving up in an uptick, meaning that the candle is going up, right? We're going up. Shorts cannot short the bid. They have to short at the ask. So there's a difference when you're short, when the stock is not on short sellers restriction, they can short into the bid. When it's on short sellers restriction, they have to buy the ask, right? They have to short the ask on the ask side, which is going to be higher than the bid, right? So you see the bid here is at 7.63 and the ask is at 7.67. When you're not on short sellers restriction, they could put their short orders in 4 cents below 67, right? Which brings the stock down. You have a lot of short orders coming here, right? The algorithms, they see the orders sitting here 4 cents below the ask, it starts to pull the stock down. If they're shorting, they have to short at the ask on short sellers restriction. So they start to buy the ask, which starts to get this kind of squeeze, this momentum going up. And you can see as soon as the market opened, right? Reddit, whoever it is, they know it's on short sellers restriction. They start to just pour the volume in, and you can see it rips and goes from 6.6 all the way up to 8.42, right? Before it kind of double topped up here and then kind of sold off a little bit. And you can see started to hold VWAP, went below VWAP to try to bring it back above VWAP, started to form a cup and a handle here, but shorts came in and they kind of, they pushed it, right? Brought it back down. And now what do we have here? Same thing with SPY, right? You start to form an inverse head and shoulder. So not a pretty one, but you can see right here, that's going to be your head. Let's not make this a little too big. And this is how I traded it on Friday, because I saw this inverse head and shoulder. So right here, right? Once you started breaking that neckline, like right around this area, and it's above VWAP, look what happens. Buyers came in, they saw that, and then this thing just ripped all the way up here to 8.5, and came back down, and bounced right around here, almost bounced off of this top over here, right? This double top here, so that double top is going to be support, and then after this, all the way up to 8.8, and then that's how they squeeze them. And you just got to find the patterns in here. Now, if you take a look at the 5 minute, let's delete all these lines. You're going to see why trend lines are very important, so you know how to swing trade. Just like Redbox. When I sent out Redbox, right, I was like, okay, Redbox is holding that trend on that 5 minute. You can use a 15 minute. I just like to use a 5 minute. Look at the trend, right? So it's not very hard for you to find the trend. Just go back a couple of days. Look at this trend right here. All right, so let's go there. Then we're gonna go over here. And we're gonna go right around here. Right, so you have this trend started here, it bounced here, and look at this right here, right? You can see it try to get above that trend line here, and it's shorts, they come in, they slam it down, right here, and now look what happens. See why 6.5 was very important? Because 6.5 continued the uptrend, and then that's how you have this gap up here to 8.8. Now it's still in an uptrend, so what happens? This can still go a lot higher because we're still above here. And if you look, 9.89 is the low. At the same time, this uptrend line here, right? Now go ahead, take your line from up here. We're gonna start to get into these wedges, right? Here, if you had this line and this line here, you see that big wedge right here. Where would your order be to buy? As soon as you saw this volume here comes in, you put your limit order here for buy however many shares you want to buy at 7.2. And you can see 7.2 is a very important level as well. Go ahead and draw a horizontal line here, right? You see resistance, bounce here. So, and here gets rejected at 7.2. So that's a very important area where shorts are trying to hold it. If buyers can clear this area, you're going to have that gap up. And you put your order there at 7.25, and then it rips up to 8.4 and you sell it. You have 100 shares, you made $100, or however many shares you can afford. 10,000 shares, $10,000. 5,000, $5,000.
And it looked
So-
like it hit the RSI too on the 30. It looked like it
Yeah.
tapped it right in the
Tapped it.
pre-market and shot up.
Right. So whoever is trying to move this, whoever's trying to squeeze the shorts, they're doing it really smart, because when I was watching it here and it gapped up, they were not trying to like just let it rip all the way up, because normally when you let it just like rip and open up, a lot of shorts can come in and they can halt it down, right? So they kind of did it. I was watching it. They did it really, really smart. They were trying to push it up, but they didn't let it push up too much and kind of kept it away from that halt level. So they pushed it up, and I thought it was going to open up a little bit more here when it cleared 8.5. You had a resistance up here at 8.5, and it kind of triple topped up here. If you check the 1 minute, it had was a double top, 8.5. Yeah, it's a
So
double.
like for me, I was gonna say like in the morning, you know how I hit the RSI 30 and it popped. But for like me, since I have to kind of try to trade afternoon, it looked like on that play, it looked like in the afternoon it did almost like another went to the RSI 30, but not enough like power, I guess you could say, that it tapped RSI 30, but this will hit like what's above it, like what 40? It looked like it hit the RSI 40 and then went back up, I think. Was this the same one? Or did you change it?
No, I changed the time frame. The time frame is what I changed.
Oh, all right. I think it was right there, yeah, at the 14.
Yeah.
50, it looked like it started going back up. But you see how it didn't touch the RSI 30? It kind of went like what was that? More late. My question is more in the afternoon. Is it gonna be like RSI 40 instead of the 30, like higher up, you know? Because it's less power, right? So that's more volume.
Yeah. No, yeah, you're right. Yeah, no, you're right. Yeah. So yeah, you can use the RSI, right? And you can see this one dipped under 30, but that's after hours over here. But the most important thing is if you're trying to swing trade something that's being pumped up by Reddit or whatever it is, it's going to be risky. But another thing to do is check. So the dailies, first thing to check is the daily, right? Now, if it gaps up, you see all these gaps in between here, right? It could come down and fill all these gaps that it just created, right? So gaps could be filled. This one closed with a hammer, kind of a candle on the day when we swung it, the 23rd. What is that? That is bullish. So that's why you see it gaps up the next day. When you have a hammer candle on the daily, this is what you call an inside bar or inside day. So when a stock gaps up like this, it's going to create an inside candle, like this red candle. That red candle is an inside bar. That's what we wait for. Once that closes, if it's a hammer is a bullish candle, you take a swing trade, because the next day that tells us that we're going to gap up. Then you gap up, and you can see it came up to 8.8 and sold off a little bit more than I would have liked. it to sell off from this 8.8, but that's because it was super expensive to borrow. So shorts did not want to hold it overnight and over the long weekend because it's going to cost a lot of money. So guess what? They just started to slam this thing down. And just look at that selling. It's crazy. 8.8 all the way down to 7.6. Extreme in about, what is that? In about 30 minutes, it went from 8.8 down to 7.6. So you could buy long and you could short at a peak up there and you make money at the same time going down. But it's crazy how that kind of sudden pressure just sends it down, right? Because when you look at these volume candles, right, you had this huge volume candle here of almost 1 million per minute, and it only moved it from 8.4 to 8.6, right? But then as soon as you're up here at 8.8, you have a red candle that's only about 400,000 shares, and then it just starts to, dump this thing really hard. Selling pressure moves a stock down really, really fast versus when you're buying something for it to go up, the volume, it just doesn't equate. I don't know. So it's weird. When something's selling off, it just drops, just like SPY, right? When it's selling off, it just drops. We dropped like what, $15 in one day, right? When there's a lot of selling, when you gap up, you're only gonna get maybe $10. Right. So selling pressure is always a lot more effective than
My question. So you said when you're shorting, you have to pay interest to do that?
Yeah, you have to.
Right. So do you do that when you pay calls? Well, when you buy calls, or?
No, you don't. When you buy shares or anything, you don't pay.
So do you think that's why?
Well, yeah. So the reason, so you pay short interest, right, when you borrow shares. Why? Because short borrowing shares, you're borrowing it from shareholders. So if you have Revlon, right, or anyone in here has Revlon in their portfolio, you have 10,000 shares. When I go to borrow, you're lending me your shares from your portfolio, right? And that's the whole thing that's going on now. Everybody talking about naked short selling and GameStop and whatever, because they're saying the whole float is bought up. So where are shorts getting the shares from, right? That means that they're creating synthetic shares and they're just shorting with synthetic shares because everything is locked up. So how can they be shorting, right? So in normal circumstances, I don't know the whole stuff with all of that, like if everything of AMC is locked up and whatever, and there's naked short, but just to say Revlon, for example, that's not the case here. When you borrow the shares, right, it's coming from somebody that's holding that in their portfolio, just like Apple. If you short, well, Apple's easy to borrow. You don't have to pay to short Apple. But like a penny stock, low float stocks are always going to be 9 times out of 10, they're going to be hard to borrow because there's not a lot of shares out there to short. For example, the float on this is 7 million. Apple's float is 17 billion or something like that. So there's a lot of shares out there. It comes from shareholders' portfolios. And sometimes you'll see that you get like a little payment, like maybe from that, from your broker, because they lended out your shares to whoever's trying to short. You get a little payment, maybe like $2 or $3 or $4. The broker would get like, if you pay like $1,000 to short a stock, and let's say it doesn't come from one person's portfolio, but let's just say, all of that money all the shares came from your portfolio that the person paid $1,000 for. If I'm shorting, the shareholder, is probably going to get like $5 from that $1,000. It's just one of those. It's really crazy how much you will get. You're not going to get a lot. But that's
that would have been a good short right there, huh? At the end, at the very end, before the aftermarket started. What did it hit? That little peak, 970 or something. 870 or 970. So the very last peak, the high peak at the end, right there. That would have been a nice put right there, huh? For an afternoon play.
Yeah, that would have been a nice put up there. It had triple topped up there. So you can watch, when you're shorting or when you're going long, this is what you're looking for: double tops, triple tops, an extension of the chart. So you could draw this channel here. I'm not going to try and draw it perfectly, but you can see this. If you just run the camera right there, kind of right here, you can kind of see where the channel is starting to peak at. So top PT would have been like $9, right? Because it started to trade inside of this channel here. So the top peak would have been $9, and then you take your profit up there because it's not gonna extend above this channel unless it halts up. It's the only way it's gonna go higher, right? The top of this line is telling you where it's gonna peak and it's gonna pull back and then eventually curl and go higher, but it cannot go higher than the channel unless it halts up. Just the way trading is and how everything is done. It cannot go higher than that channel there. But if you also zoom out, patterns, man, you gotta learn these patterns, right? If you zoom out right here, what do we see? Can somebody tell me? Anybody? I'll do just a piece of it for you guys, right? Not gonna make it perfect, but just a little piece. So that right there, right? Now I zoom out, what do we have here? Let's remove this line here. Does anybody know? So if you look in here, we have a cup and a handle. This is your cup right here. Watch the mouse, right? That is your U right there. You come up, this right here is your handle. And this is how I knew that this was gonna go higher because I still had my shares even when it came up here to 8.5. I didn't sell because I saw the cup and handle. As soon as it came here, right? I drew my line down and then I connected this right here and I saw a cup and a handle and I sold right up here, 8.65 or 8.7. This is where I sold. And that was it. Got a little bit more profit, got like maybe 20 cents, but I was pretty confident that it was gonna go up higher because there you have that cup and a handle right there. So
Hey, can
Just
you
got-
retrace the cup and handle? Because I think I see two of them. So.
okay,
so-
that be two of them. Because there is two of them. So this is your big cup and handle, right? So just like a U, I'm gonna make a U. Think of it as your teacup. It's your teacup. I don't have the stuff on this bro. Some brokers allow you to draw like bend your trend lines and draw like U's and whatever. But you can see here, this is your cup. Look at the cup, right? Start to curl around, make that bottom, that U, right? Then you come up to here. Then this right here is your handle. So now let me pull up a cup and a handle pattern.
It's like,
That looked like
oh,
a
my
good call right
stomach-
there. Was
oh,
that
my
rev still?
stomach-
So look right there, right? You see it?
At 13.25.
Yeah.
You see the cup and the handle, right? So right here, follow this piece right here. This is what I'm drawing. Follow the cursor all the way around to that U right there. Now we're here at a rounded bottom, right? Subsequent rise is right around here. Is where we're at here. Then we go up, right? We top out. Then we start to form a handle, which is this right here, your line, which are these two lines here, are downward sloping. And if you were long and then let's just say you came trading, this is the first time you're going to trade for a day and you see this stock going, right? Where do you buy? Right here. As soon as it broke above that resistance there, that double top, you could buy right here. As soon as it broke above the handle, you could take an entry right here. And what? You sell, right? Continuation of original bullish trend. And there it goes. And you take your profit up here. That's about from 8.2 to 8.8. That's 60 cents. If you have 10,000 shares, that's $6,000. If you have 1,000 shares, that's $600. 100 shares, that's $60. It just depends on how many shares you can afford.
Right.
You can make a huge amount of money right there.
So at the point of 8.8, you're just watching the candles to see where it will drop.
Yeah, pretty much. Yeah.
Okay.
And at the same time, you have triangles in here, right? You have, let's go over here, take the speak up here, reconnect right there, right? Right here, you kind of have a, not a descending wedge, a descending triangle with this flat line here of the 7.2. And then this line here, you have a descending triangle. This is different from a descending wedge, right? A wedge is going to be a little bit more pointed, like I showed you on SPY. A triangle, I can't remember. I don't remember all of them, right? Let's see. Descending triangle pattern.
By the way, what chart are you using?
I'm using trade zero. I'm on the 1 minute.
Okay.
So this is what I'm trying to show you guys right here. This is a descending triangle, right? So this line up here, all the way down, is going to be that top piece here. And then this bottom line right here that you see I have at 7.2 is going to be this line right here. Now, this is telling you that is a bearish pattern, right? You see, it tells you trend continuation, but it depends on how it falls inside of the trend. So if you see, it has to be perfectly like this. So you have to test once, down, twice, three, whatever, and then it goes down. If you do this one here, right, you don't get that, right? You take the only time it touched was this first one here. So let's say we have this first one here. Then you see we came down. It never touched here multiple times like you see in this flat lower trend line here. We didn't touch 1, 2, 3, right? You never got that here. You only got one touch right here, and then it just came up, and then it negated that bearish pattern right there. Why? Because the buyers stepped in and they negated that pattern and it went up. So it is a bearish pattern, but in this case, the buyers came in and it just didn't follow this same pattern that you see in this picture right here. It just didn't follow that, and then that's why it broke to the upside, because it had a cup and handle, which kind of negated all the descending triangle. Sometimes you get mixed up with descending triangle and a descending wedge. You get it mixed up. It's just one has a flat bottom and a top that kind of what do you call it? Descend resistance line. If you want to take this is a ascending, right? It's the ascending. This is an ascending triangle. You see, it's a little bit different. It doesn't have a flat bottom, right? It has a flat top and it's more of a point. You can see it pushes up towards the top. So that was that for Rev. So this one, first you started a trend here. Over here you had that channel that started here, right? So you kind of connect, right? So connect that channel. You're gonna see why all of these things is very, very important that you learn how to draw them, because first you have that channel right there.
Yeah, if you connect the bottom trend line, you could see that it at the very bottom, it looks like it popped on the second.
Yeah, right. So it's all about trends, right? So we're gonna draw this channel right here, right? So we're gonna connect this to the peak right here. Gonna run that line all the way up through here. You're gonna see why this line is important. You would have had this line drawn before this ever happened, right? Because once you saw this right here, you can go ahead, draw that line right there, and it's gonna go and it's gonna touch here. It's gonna get rejected. Now you're gonna have to wait for this to happen for you to get your channel. This is your channel right here. Now what happens, we're gonna go ahead, extend this line all the way up, right? Let's run it all the way up. That line right there. So we started trading here. You can see they try to push it into the channel, right? To push it to go higher here. You can kind of see kind of a cup try to form right here, but it just didn't form, right? Selling pressure came in, shorts came in because they saw the pattern. They're like, okay, well, I'm not gonna let the bulls run this thing. We're gonna short it. And they pull it down. It tried to hold inside the channel, but the shorts are like, nope, we're gonna try to slam it down. Didn't, they weren't able to because it has support right there. It came up, it touched the channel again. You can see got rejected, right? Then market opened and the buyers came in, they ripped it up. And it's as soon as they ripped it up here, what happens? It's breaking this descent and resistance line all the way up here from the high that it had of 9.89. This line is coming from at 9.89, right? So you can see it broke that line. So now it's starting to uptrend and it gets back inside this channel here, trades inside the channel, and it breaks out the channel and it rips up. And it was trying to, you can see now right here, you start to have a wedge starting to form here, right? From this line here to this peak. And then this line connecting here, you start to trade in a wedge here. What happens? For it to go higher than here, it has to trade inside of this wedge here and trade to the right all the way. And then it will eventually go higher. But what happens? southern pressure and short sellers that are getting squeezed, they come in and they try to drop it back down in the channel. They try to drop it out of the channel, right? And they didn't let it go into a wedge here to push to the upside. And it tried to reclaim the channel. It got slammed here trying to get above VWAP, and they try to bring it down. Eventually it get above VWAP and it came up to 8.9. You can see all of your lines are going to be here before this happens. And you see why your trend lines, this is why I only use trend lines, nothing else, because it's going to tell me exactly what a stock is going to do. Double tops right here. Just as you see this wedge, it was going to break out to the upside. Nope, look at that. As soon as it tried to go, right, huge volume bar, boom, shorts came in and they slammed it right back down because somebody doesn't want to get squeezed. And I was watching this thing all day and I was like, man, somebody is really holding this back. Like someone has a lot of shares short that's going to lose a bunch of money and they don't want it to go. So they try to slam it down short. And you can see now right here, you start to have another wedge right here, right? So it could have traded in here again and then go again, but nope, they decided to bring it down. And now you see it came under VWAP and then buyers came in, pushed it back above VWAP. And what happens? You get rejected again right here in this channel. Same thing as here, right? And they pushed it back down. But at the same time, you have a cup in the hand performance. So, the pattern is not going to lie. It's going to tell you that we're going to go up, right? And you're going up. And look at that. This is where I sold because I knew it's going into resistance. They're going to probably slam it again. And I got out right before this nasty red candle right here. So I waited. I didn't sell here at 8.5 and I waited and it went up to 8.6. I'm like, I'm done. I'm not going to wait. I'm not going to watch this thing anymore. I'm done. So I sold right here into resistance at the top of the channel. And as soon as I got up out of my seat, I see a nasty red candle all the way down here. And I was like, okay, good thing I sold. But it bounced off that 8.30 support. You can see it double bottomed right there. And then you have a bottom, so triple bottom or a bunch of bottoms at 8.3. 8.3 was really strong support. And then it ripped back up to 8.8. But as soon as it tried to reclaim the channel, right, to go higher, shorts, they sold it right down. Because if it reclaimed this channel, it would have opened up and then top target would be 9. And then it's going to open up to go for that high that it had over here at 9.89. And if it went above this 9.89 on Friday, it was going to run into after hours and maybe 11, 12, 13, 14. You'll see it going because it's heavily shorted. So that one's Revlon. So hopefully you guys kind of see how these things move and the patterns tell you how they move, right? Bigger time frame, bigger wedge, broke the wedge right here, up, right? All the time frames are going to show you the same thing. It doesn't matter. It just depends on which one's easier for you to read. Some people like the 15, some people like the 30. It just depends on your preference and which one's easier to read. You can see the 30 is still going to show you the same way as the 1 hour. It's still going to show you the same thing, right? It's just the candles are different. Some people like these full candles. They wait for an hour for confirmation. Some people like 15 minutes. It's going to show you more than one candle in there, right? 15 minutes is going to show you what? 1, 2, 30 minutes is going to show you one big candle, right? 1 hour, same thing. There's one big candle. Some people like 2, 3, 4 candles for confirmation. Just depends on what you like. No right or wrong. So going back to this one, still going to watch this one into next week because if it could get above that $10 area, it's going to go to 11, 12. And then after, if it breaks out above 12, you're talking about 13, 14, and then eventually that 17 area. And this thing could really open up if it gets, above 17, 17.5. If they could get this anywhere up here, you're talking about a massive short squeeze all the way up to 30. And it's a very popular company. So just keep it on watch. I'm not saying it's going to go there, but it can, right? So you have this descending resistance as well. So now you take a look at that, right? Perfect, right? So hopefully you guys are seeing this, right? Descending resistance, look where it goes, right? You see why they shorted at 9.89? Look, right there. They didn't want it over 10 because if it got over 10, it was going to open up, go all the way up here. But shorts, they know where to short. And then, they know how to make money from it. So they came in here and they put a bunch of walls right there. And you have resistance right here at 10, pretty much. You have that flat line right across here. You can see it. There's a lot of resistance. So if it broke above that and went over 10, bunch of shorts are going to be running for the fences. So that's Rev. We could take a look at Amazon. So Amazon, right? Remember I said, don't chase Amazon right out the gate. We did play a weekly call on it, which we lost from. But spot was green that day, so I was like, let's take a 130 call and see if it will go, but it just didn't went. You know, we sold off down to 100. So Amazon, oh man, this chart's not gonna be. You're gonna have to. You can't use a daily right now because it has the split, so it just doesn't make sense. Let's see if we could use the what? Okay. We'll use the 30 minutes. So that $100 support. So now we could start because it's split, right? So we know that this area is very strong support. So going forward, if you're interested in Amazon, you know that 102 or this 101.4 is very, very important support. So if the market starts to sell us off severely, and we see Amazon come back down here to this 102, then we see it start to break below 101.40, you could go ahead and load your puts for in the 90s if the market's really bad, because it's gonna bleed just like it's gonna bleed all the way out. We'll go back to after this, right? So going forward, now that Amazon has split, that $100 support is very, very important. And if it breaks, it's gonna probably see 90 and 80s, right? If the market's bad, but so that's why I played the 140 calls, because we had support here at 100. So I was like, okay, it's really bottom in there. We took them when it was around 106, I think, right? Somewhere around there. I think it was 106. So I was like, okay, we have a strong bottom here at 102. That support, if we play the puts here, we're only risking about, $4 back down to 102 and for it to break below there and go lower. So I was like, okay, that's a good risk to reward ratio right there. The chart wasn't really set up for it. That was just like a psychological play. The chart was not telling me anything. It was just one of those plays where sometimes you play something, it's like you have to play it with a mindset instead of the chart sometimes. So Amazon was just a play from just my thoughts alone. So as long as that holds right there, right? You can see up here, back we're up to 116. So we're up about $10 since that play. So that's Amazon for now. It's not gonna move like it used to in the past. That's the only thing that sucks with Amazon right now. Is like, a lot of people are pissed because it's split, right? Because after it's split, we opened up at 120. Let's see if we can get it on the chart here. 124. It's not gonna populate on the chart, but I think it was around 123 and get up to 128, right? Because a lot of people came in to buy it. And the shorts were smart about that. They knew a lot of people were going to come in to buy it, so they're going to slam it down and make money. But in any case, if you do the math, 100, when it came down to 102, it's about $2,000 per share. So we go to the daily and we go back to 2,000, right? When it's sold off, what do we know, right? It has strong support around that $2,000 area. So that was another reason why I was like, okay, it's at about 2,000 per share when we're at 100 after the split. So I was like, okay, that's a good support area right there. Let's play it off of that support area. But options are not they're gonna make money, but not like, if we were playing a call option and we're at 2,000 and it gapped up down, like I gapped up from that 102 bottom, it'd be probably like 2,300, right? There's like a $300 move, but it's not going to move like that anymore. So that's a little bit unfortunate. But it's a good thing for long-term people that have smaller accounts. And we'll take a look at AMD. We're just going to go over some of the plays. So AMD, right, when we had puts coming down through 100, when I sent it out, I was like, okay, I'm looking for this $100 support to crack. All right, we take a look at AMD. Let's just go right to 100. We're not going to chart anything. We're just going to go right to 100. And we're going to see why 100 was very, very important. All right, so let's see if we could get it right at 100. Come on. Oh, we just do it right here at 99, right? So 100 on AMD, right? 1, 2, 3, bounce, right? 3 times at 100, so triple bottom right there. Look what happened when it broke that 100 this time, right? From 100 down to 84. Came back up over 100 to 110. So guess what? Same thing's going to happen if it breaks that 100. You're going to get that huge sell-off, and if it actually went lower this time. So that's what I sent out the AMD puts, because $100 with triple bottom support right there. It was really that simple. Now AMD, right? You draw this line right here. So if you're long-term in AMD, you would like for it to get over 113. It's very, very far away from doing that now. So gaps on AMD, right? Now that SPY is moving up. AMD, you could play a 90 to 95 call if SPY keeps going.
Looks like hit the RSI 30.
Yeah, RSI very low, right? You can see where RSI bounce pretty much bounce around. It's safe when they come down here in the large caps, mid caps. When they come down to 30 RSI, you can just go ahead and load some calls right there. But load got the green candle. It's like Apple, right? Apple, you see RSI very low on the daily. Safe to buy calls down there. But you can see same thing as SPY, gap, down, right? Fill in the gaps. So Apple was this gap right here. Gap is 142 pretty much. So it has room up to 142. So we close at what, 140? We're at 141.75, or yeah. So 142 resistance. And you can see got up to 141.88. So it could break above that, and then we have to just kind of see what happens on Monday. So. Yeah. What else do we play? Apple, SPY. So if I'm playing SPY, right, and I know SPY is gonna sell off, right, and you see the Fed decision of raising whatever comes in as bad or inflation. If I'm playing a SPY, you could go ahead and play Apple. You could go ahead and play Facebook. Amazon, Microsoft, you could go ahead and play puts on all of them. And that's why when I sent out the SPY, I'm like, okay, I know we're going to gap down, so I'm just going to send out 3 of them. If you take all 3 of them, you're going to make money. If you take 1 from all 3, you're going to make money. So that's why I sent out all of those at once. Whatever one you took, it was going to make money. If I'm playing a SPY call and you like Apple more because maybe the contracts are cheaper, you like how it moves more than SPY, right? You don't like the headache of SPY watching it. You could switch from what I'm playing and take Apple. It's going to be the same thing. It's going to SPY's not going to move without Apple, and Apple's not going to move without SPY, because they're all in the S&P 500. They're all moved together. So any kind of news and SPY's, Apple is very, very heavy. The SPY is very, very heavily weighted by Apple, because Apple's market cap is what, right? Maybe 2 trillion, right? Somewhere around there. So Apple is very, very, very big part of the S&P 500. So that's why when you see Apple is green, chances are SPY will go green, or it may just be a little bit green on the day. But if Apple is really green, SPY is going to be really green. What else? We can go over RDBX, and this one was a great one. Right around 5. We got in. I don't remember what price we got in. 530, or I think somewhere around there. I don't remember exactly what price, but RDBX is kind of the same thing as so around 530, and we got out to 18. So I don't know if anybody held all the way, but I didn't hold all the way. Sometimes these swing trades, they're gonna, some of them are gonna go crazy, some of them are gonna sell off a little bit. You just gotta make sure you have a stop loss in. So RDBX, this one was around 5 when I sent it out, right around here. This day was when I saw it actually. And if we take a look at I want the 5-minute chart to go all the way back. Let's see if we go all the way back on the 5 minutes. It's the same. I use the 5-minute a lot if you guys are kind of wondering what I use. It won't let me go all the way back on the chart. Let's see, period. Yeah. yeah, I can't go all the way back. But let's see if I can use a 15-minute. So we had a trend all the way from, okay, so this is the sell-off right here. I'm not sure if it's gonna show me that trend on the 5-minute. So let's see here. I think it was right. Yeah. So that was the trend line that I had on the 5 minutes, a little bit clear, more clear, but you can see this is the trend right here. Actually, this needs to come down just a little bit. So right there. Right. So that was a trend that I saw, and it dipped under 5, but as soon as I saw it reclaim this $5 area, this is when I sent out the alert to take a swing in red box. And you can see after that just kept this line in and just gapped up and went all the way up to 18. I'm not sure if anybody held all the way up to 18, but I didn't hold all the way up to 18. But you have to really have diamond hands to hold up to 18. And this is one of them that can really change your account if you have a good amount of shares. I didn't make the most of it, but it's one of those things. And 15-minute chart you can use as well right here. All right, so that was your your patterns right here. You can see it keeps breaking these wedges and stuff, right? So right there, right on the 15. If you want to use a 15, you can wait a couple days, 1, 2, 3 days for these things to set up, right? Swing trading, you're gonna wait a couple days, and you could just kind of zoom out, like, oh man, okay, red box is really hot, right? You draw this wedge right here. You're like, okay, it's gonna break out, and you take an entry as soon as it breaks out here, and it goes from 10 and it rips all the way up to 15, $5 per share. And then the next day you kind of hold it and you're like, okay, it's not selling off. I'm all the way in down here at 9. Let me hold it a little bit because it's kind of holding VWAP. And then look at that. Next day, rips up in pre-market and then just decides to squeeze a bunch of shorts. But at the same time, it goes up. It's going to come down, right? Because why? First, you have there. All right, patterns are always going to play out. You can start this head right here. And this is kind of odd right here, but this shoulder is just a little weird, but that's fine. All right, so you have this little shoulder right here. So kind of a head and shoulder, but very, very ugly one. Or you can put it right here, a little mini. It'd be more of right here and then right here. But you can see it right there, kind of a head and shoulder in there. And then kind of sold off. But you can see why this level is important, because if it breaks this level right here at $9 area right here, it's gonna go, right? So you can see they're trying to bring it down right here, but it kind of bounced back up. But this area, that 9.4 is very important. You see why, right? Up, kind of holding that 9.4 support, and it's right here in that support area. So one more day, if it slams down, has a lot of room down. It could go all the way back down to where it came from, 5 or 6. So it's a good one to short. If shorts that got in up here at 8.2, they're making a lot of money, $9 per share. Another one that went crazy, AERC. Now this one was something else, man. This stock was just insane. It was something else. This stock went from 3 right here as soon as it broke out here, right there, went from 3.8, had support at 3.8, and then it just ripped, and within a couple hours it went from 3.4 all the way up to 15. It was insane. It went up 600-700%, and then it just kept going and all the way up to 23, and now started to get shorted and back down. So, I mean, do you guys have any question? My neck is starting to hurt a little bit, so I'm gonna probably jump off here in a little bit. If you have any questions, just ask them and I'll get to them.
Are you jumping on Revlon this week, Ben? It seems like we've been watching a lot of Revlon. We're gonna try to get on Foots with the bankrupt.
Well, the bankruptcy news is already in. The thing now is that there's a lot of rumors of it being bought out because it's a very popular makeup company. So There's like there's some billionaire from India that they say he's interested in it. So yeah, it's one of those where you have to be careful because if there's buyer rumors and a lot of interest and Reddit behind it, it could still squeeze. But I could take a look at the puts and see how much they cost on it. Usually, I don't like to play it. It's very rare that I send something out on a penny stock, like an option or something. I just don't like how they move and how it works. But I've never really been successful at options on penny stocks. Like even if the stock is like very, very popular on social media and whatever it is, I send it out and it just never goes. Redbox, do I think Redbox will go up to 20? It can go up to 20, right? But it's holding that. Well, I was hoping it was holding $10, but it's heavily shorted. Short interest is crazy, crazy, crazy on it. The only thing that worries me about it is the merger that they have with Chicken Soup for the Soul, right? That's why it's going up, right? So if you guys are not aware, they had a merger agreement with. Well, first of all, the stock was running. It was heavily shorted and it started to go up, and then they had a merger agreement with Chicken Soup for the Soul. But when you read through the merger agreement, Redbox shareholders after the merger, Redbox is going to be 57 cents after the merger. It's going to be 57 cents. That's what it is, right? The merger, I think, happens in October or somewhere around there. So even though right now it's at 9.75, when that merger goes through, it's going to be 57 cents. So that's why a lot of shorts are shorting, because they want this thing to drop down to 57 cents and you make a lot of money. But at the same time, a lot of institutions own Redbox. So they're trying to run this thing up so weird that the merger gets called off. But as it always happens, man, these merger deals, they always go through and people always get screwed over. But if you can get in a little bit early, like we got in around 5, then yeah, you could make some money on it. But you have to take the profit because the deal is going to go through. I haven't seen anything that says it's not going to, but it's heavily shorted for one. And if the institutions that are in here are trying to push it, they have firepower where they could squeeze a lot of hedge funds and stuff. So it can go to 20, but it has to hold this line right here. So 8.5, if it doesn't hold this line here, it's probably not going to. But buying pressure needs to come in and, for it to keep going. So the only bad thing is the merger agreement of it being 57 cents per share. It's very expensive to short. I don't think there's any shares out there for sure. At least I haven't checked, but I'm pretty sure there's not a lot out there for people to find to short. But Redbox, you can see when we got in around 5, right? You have that that wedge right there. It broke out of it and then just decided to go up, where you had this bullish engulfing candle and then boom, 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 and up. And look at that right there, double bottom, right? And then up and up. So. Any more questions?
I'm heading to San Diego. Where's the party at, Zero?
Are you coming down today?
Yeah, I'm on my way right now, actually. So now we're gonna go to I think the fair. So I don't know if you're still in town or if you feel better from the accident.
No, I'm here. Where in San Diego are you coming?
Hey, what part of San Diego are we going?
We're going to downtown.
Downtown, Del Mar.
Del Mar? You said Del Mar? Oh, he's break.
Find out. Got anything fun out there? Might hit up.
What is my take on Revlon?
Going right now.
You're welcome, Mandy. My take on Revlon, we just have to watch it. Have to watch it and see if it could break above that high that it has. So has to get above first it's gonna run into resistance here now at 8.8. Then it has to break 9 point. So resistance levels, we're gonna run into his here. We're gonna run into this double top, kind of double top up here, pretty much. And then we are going to run into resistance there. So 8.8, 9.25, and then 9.5. And then if I see it going up this day and it's breaking above, then yeah, we could day trade it for it to break to this 9.89 and then rip up because it's still hot. So it's still heavily shorted. But when you start to get up into this, this area here, it kind of up high a little bit. You have to have your stop losses in, and you have to go in with a mindset like, okay, I'm gonna put my, chances of you could take a loss on it, right? But at the same time, if it starts to open up, you can make a lot of money on it, right? In the past, which ones have I sent out in the past that went crazy? We had INDO, right? INDO. I think I don't remember what price I sent it out at, but this is a long time ago. Went from what was it? From like low all the way up to 80 something. Right, we got in very, very low, like around, I don't remember exactly, but very, very low, and went all the way up to 86. SPRT as well. These are the possibilities. Well, SPRT is probably GREE now. Yeah, SPRT, that one's not on here anymore. We got in on that one like around 9 and it went to 60. LGVN, right, another one. So these are possibilities, right? LGVN was around 7 or 6. That was the entry and went all the way up to 45. Mandy, you got it.
I remember that one. LTVN, I remember that one. That was popular back last year, a while ago.
Mandy, INDO, I think it was like around 15, right? Got in around 15. Yeah, INDO was 15, and you can see went all the way up to 86. But you have to take them and you have to say, they're super bullish and they could go, 86. As you see, right, from 15 to 86 is a lot of money. So those are the possibilities. Those are what they can do, but you always have to have a stop loss in place. And if it goes from 15 and it's at 20, right? You put a stop loss in at 17. That way you give it room to go up because it's not going to go straight up. They're going to short and people are going to take profit. Now it opens up to 25, 26. You put your stop loss at 20, you're in 15. It goes to 30, you put your stop loss at 25. It goes to 40, you keep pushing your stop loss up. And then that's how you get all the way up to 86. But INDO, man, like I had like 4,800 shares at I think it was around 15, 14. I don't remember exactly where, but and it went up to 80 something. I saw that like 19 or 20, somewhere around there. So you see how much money you leave off the table. It's not easy to hold these things all the way up, but yeah. Any more questions?
Do you have time to go over just like buying and selling, like the limit orders and all that, and like stop losses?
Yeah,
I just want to understand it a little more.
Yeah. All right, so I'll put my order entry up. That. Okay, so this right here is a order entry window, right? So this is where you buy and sell a stock. So you can see Revlon right here, ticker symbol Rev, SSR, that's short sellers restriction. That's your name of the company, Revlon Inc., whatever. Quantity, however many shares you want to buy. If you want to buy 1,000, you type in 1,000 shares. Market order, market orders only work when the market is open, not pre-market. You cannot buy a market order at pre-market. This has to be during regular market hours. Market is opened up, which is going to be 6:30 Pacific time, and that's 9:30 Eastern time. That's regular market hours. Market orders are only going to go through that time. Market order, you're just telling the broker to fill me at market price. So 7.63 is the ask right here. I mean, the bid, 7.67 is the ask. When you hit the market order, it's going to get you in at 7.67 or close to that, 7.66, somewhere around there, right? It's not going to get you at, not that you filled at 8, right? Because the market, that's not where the market is. It's not going to fill you at 8. It's going to fill you in between that 7.63 or 7.67, but most likely it's going to be 7.67. So you're buying the ask price. So that's a market order. A limit order, right? This is you telling the broker, fill me here or don't fill me at all, or sell my shares here. This is where I want my order to be filled, right? So let's say Revlon's at 7.67 and I'm like, I want to buy 1,000 shares price. This is where you're going to put, you're like, well, I want to buy it at 7.61, right? You're like, I don't want it at 7.63. I don't want it at 7.67. You put your limit order in and you hit the buy button and your order is in to get filled at 7.61, right? That's a limit order. This is how,
so it doesn't need to be in between the ask and bid price.
no, you can put it lower.
Oh,
Right. Yeah, you can put it lower. That's how that's how shorts bring the price of a stock down. Let's say they're short at 7.67. They put their limit cover at 7.3. Now you start seeing on the tape 7.3. Let's say someone shorted 100,000 shares at 7.67, but they want to cover that 100,000 shares at 7.3. What they do, they go ahead, put a limit order in, put at 7.61, hit that cover button, right? And you can see right there, it's going to flash that up. Your short position right here. And as soon as that comes up, it comes into the bid right here. And 7.3 is going to be where the algorithm is going to see that big order at 7.3. So now when it goes to 7.3, shorts, it kind of messes with the algorithm. And it starts to bring the price of the stock down when it sees that big order at 7.3, right? So now you see here at 42, that's 4,200 shares. Someone's selling here at 7.6. And at 7.63, that's 800 shares. These are not big orders, but really big orders is what they use to bring the price of the stock. Now let's see if we can bring it. This was what printed on Friday. This is the time of sale. So these are all the orders that went through. I can't go very far back. I was trying to find a big order. Well, you have
so
somebody.
once you limit the price, once it gets to that price, does it like what do you say? Does it sell everything? Does it sell automatically or?
But I just called to make sure you're all right. I say, man, everything work out smooth on kind of moving up and down and all this kind of thing. And then we was doing that. I had to get Q1. And I say, just stand up where you could see you and things work out smooth.
It's gonna
kind of breaking up.
So if you got in Revlon at 5, right, and it's up here at 7.63, you put a limit sell in, however many shares you have. If you have 1,000 shares, it depends on if you want to sell the 1,000 shares, that's up to you. If you put in a limit sell, you have 1,000 shares. You're like, well, I don't want to sell my 1,000 shares because I think this thing's going to go to 100. You go ahead and put 500 and you put your limit sell in. You sell 500 shares and you keep 500 shares. So it's not going to sell everything. It's just going to sell what the quantity that you want to sell in. It's just like options. If you have 2 contracts and you want to sell one, you go ahead and sell one, and you have one, leave it for whatever. Right, so it's not going to sell everything. You have to go in there and you put in what you want to sell and what you want to buy. So that's limit order. Limit orders are the only orders that can work in pre-market and after hours. You cannot do market order. It has to be a limit order. My route is smart. That's the only thing that's available to my broker. Time in force, that's day. You want it to be day. Good GTC is good till canceled. So you could put an order in, you could buy Revlon at 1, if you bought it at 1, you could put a limit order in to sell it at 10. You change it to good till canceled. When it goes to 10, it's gonna sell. Your broker is gonna sell. You don't have to look at it. As soon as when it gets to 10, it's gonna sell automatically. You don't have to look at it. But GTC orders are only good for 90 days. So after 90 days, it's gonna go away. So if the stock didn't hit your price, you have to go back in there and you have to put that order in again to sell it. Stop price, right? This is gonna be for your stop loss. So stop loss is gonna be stop limit in my broker. Your broker may be different. They may just have it as stop. If I'm in Revlon, you know, say 10,000 shares or whatever it is at 7, and I'm like, okay, I think it's gonna go to 8, and it's at 7.6, right? If I want to take some profit off the table, I go in and put a stop order in at 7.4. So once I hit the sell button, because I'm stopping out, I'm not gonna hit the buy button. You have to hit the sell button. I hit the sell button, my order is in, telling the broker, hey, I want to stop out at 7.4. I'm in at 7, but I want to stop out at 7.4. So it comes down 10,000 shares, you make 4,000. But at this point, you're up 6,000 here, but you're like, okay, well, I think it could go to 8 based on your chart and everything. So you put your stop order in. You're like, well, I'm okay with taking $4,000 profit off the table, you know, and you just walk away and it'll fill your order when it comes down. But you may get a halt down and it may skip your order, right? So that's why it's always a good thing to not walk away anytime you're trading. Shares, options is not going to happen. Shares, but you could be at 7.67 and all of a sudden it flashes down, it halts down. What happens? It can skip your order. It can, or you may get a partial fill, and it just fills some of your shares, and then it halts all the way down below where you're in. It could halt down to 6.5, and now you got some shares sold out, or maybe you didn't get any at all. Now you're starting to lose money because it just flashed all the way down on a volatility halt. So that can happen as well. These are the orders. I don't limit on close, market on close. Like you put a market order in at close, so you're telling the broker like, sell me out as soon as the market is about to close. Limit on close, I think it's the same thing. A range order, this would probably be putting in a range. I've never messed with it, like your high price and your low price. So let's say you're in Revlon at 7 again, right? And you're telling the broker the lowest that I want to get out is 7.3. The highest is say 7.8. So in between those parameters right there, it's gonna sell your order. You'll tell the broker, I don't want to get out below 7.3, and my high price is 7.8. So in between there, you're kind of telling them that this is my range right here. This is where I want to sell. If I can't go below 7.3 and stuff like that. Stop market, that's just the same as you're telling the broker, like, I want to get stopped out at market. So stop market, you're gonna put a price in, and what happens is so it's stop limit is say 7.6. You're like, I want to get out at 7.6. As soon as it hits 7.6, I want to get out. If I don't want to get out any lower, any higher than 7.6. That's where your limit is telling them. Your stop market, if it's at 7.6, is going to tell them like, if it flashes below 7.6, just get me out at market. Get me out wherever it's selling at. If it's at 7.3, 7.4, just sell my order right there. That's what stop market is. You're saying, hey, get me out here. That's it. I just want to get out at market. Wherever market is, just get me out of it. Anything else? Did that explain it?
Yes, I'm still a little confused with like buy, sell, and shorting, because I thought like once you buy it and then you put a limit, it'll get you out at that limit price. I'm just a little confused about all of that part, like a point of entry and a point where you're actually you make profit and you're out. So like you have to sell in addition to like right after you buy.
Yeah, so if you're in a stock that's gapping up, right, that means it's going up on volatility, right, like Revlon. What you can do, right, so you're going to watch it in this level 2 here where you buy it, or if you don't have this, it's going to be moving at some in your app on your broker, wherever you're at, you're going to see something that's moving, telling you where the price is at, where you can sell it. Mine is a level 2 window here. Everybody should have that in their broker somewhere in there, right? Where you buy and sell, you can see the price of the stock moving. So it's just like if you're trading Revlon, right? Like here, it's at 7.7. It goes up to 7.8. Let's say you're in at 7.7 with 100 shares. At 7.8, you're making $10, and now it goes up to 7.9. And you think, okay, it's gonna go to 8. You go ahead and put a limit order in at 8. Type in the price, put limit, put the price at 8, and just hit sell, right? Your limit order is in at 8. The broker is not gonna fill your order below 8. Right, you're telling the broker, I want to get out at 8. That is where my order is at. So from 7.7,
Okay.
order in at 7.8, 8, you're gonna make $30. Right. If you think it's going to 9, put your limit order in at 9, and it's gonna fill you at 9 when it gets there. You make $130 because you're gonna
So you click sell. Your broker don't click sell.
No, everything you have to do by yourself. You have to.
Okay. So
but
what's the point of stop loss then?
So, okay, stop loss, if you're in at 7.7, right, you have 100 shares. Say your account is, well, to buy 100 shares, you'd have to have $770. But let's say your account is $1,000, right? You buy 100 shares at 7.7. You're like, well, I don't want to lose more than $100 on this trade, right? You put your stop loss in at 6.7. Now, when the stocks comes down to 6.7, it's going to stop you out for $100 loss. And if it keeps going below 6.7, right, you're already out because you have your stop in. If you didn't put a stop in and it goes down to 1, right, you just lost pretty much all of your account, right, from $1,000 because you didn't put a stop loss in. So it's going to keep bleeding out. You're going to keep losing money. So that's why you have to put your stop loss in. Your stop loss tells the broker like, hey, this is where I want to get out at. Sell me out of my position at this this price.
But you still have to click sell even though you have a stop loss.
Yeah, so stop loss, right? That's gonna be stop. In my broker, it's stop limit. In your broker, it may just be stop. You go in, you're in at 7.7, right? So your entry is 7.7. You see where it says stop price here? I would go in, and let's say I want to get out at 6.6. I go in at 6.60, right? And I hit sell. That's my stop order in. I'm in at 7.7. That is my entry, right? I'm telling the broker, hey, sell me at 6.6, right? 6.7. I want to lose $100 on this trade and nothing more. Once the price of the stock comes down to 6.7, your order is going to execute. And it executes your order and you're cleared of that position. So that's what your stop loss is. You could put your stop. You could get in at 7.7. You want to put a stop loss at 7.60. Go ahead and put it in. You only want to lose $10. Go ahead and put it in, and it stops you out. And but that's a little bit of a close. If you have 100 shares, a 10-cent stop loss is not a very smart thing to do because you're not going to make any money. That kind of a risk right there. You probably put your stop at 7.2, like risk like $50 on that trade. Now, if you have big buyers that are buying 10, 20, 30, 40, 50,000 shares, stop loss is like 7 cents because, if you buy 10,000 shares and stock comes down 7 cents on you, right? $700 loss. You buy 100,000 shares, a 7-cent pullback is going to be a $7,000 loss. So big buyers that come in that buy the breakouts, right, make these stocks squeeze higher because big buyers are going to come in with the big shares to move the stocks, right? You look at this volume candle right here, it's 700,000 shares. So you have a lot of big buyers in this one candle here moving the price of the stock up. So they buy in, 100,000 shares here at 7.88, and it rips through 8 and then up to 8.2. Now they hit the sell button and sell 100,000 shares, right? But in this case, they didn't. They started to sell right up here. And that's why you see it start to pull back. You have this sell, this red candle right here was 280,000 shares. So somebody started to sell. These big buyers that bought in started making a couple $1,000s, and they start to sell and take profit up here. So they have their stop losses in as well, just like us. And that's why when they have that many shares and they get stopped out, you see the stocks, they start to fall really hard because let's say, you have a lot of big buyers that bought, let's just say you have somebody bought 100,000 shares down here, right, at 7.8. They sell 50,000 shares up here for a good size profit. What they do, they put a stop loss in, let's say, on the last 50,000 shares that they have, maybe depending on the chart, 8.3. So there is support at 8.30, right? So they sold some up here. Maybe this stock goes higher, it goes to 9 or 10, and now you have 50,000 shares of running, and it's just making you a bunch of money. They do is they put a stop loss in at the rest of the shares, and you have those big shares that have stop losses in. Shorts are going to hunt for the stop losses, right? Market makers, shorts, they know where the stop losses are at, right? So 8.3, a lot of people had their stop loss here at 8.3. What happens? They kind of see it, they have it here, and what they start to do is they start to sell into the bid, start to short into the bid. And what happens? As soon as it breaks through that stop loss, 8.3, you have that flash all the way down to 8.19 because a lot of stop orders starts to execute right around here. And then you can see here, bounces back up, then comes all the way down and then slam down again because a lot of stop orders start to hit because you have people that got in real low, start to put stop loss. Maybe we got in here at, at 7. Let's say somebody got in 1 and we're up here to 8.8. They put their stop losses in at 8, right? The whole dollar. Put it at 8, just in case this thing just goes to 9, 10, 11, 12, 13, 14. You put your stop order in because you have $1 per share. You're like, okay, I'm happy. If it stops me out, I make a lot of money. But you can see it comes to 8. And what happens? Boom, they slam it down between 8 because they know there are a lot of stop losses at 8. And once those trigger, it's going to increase selling pressure. And then that's what happens. And you see it starts to sell off and goes down. All right. Any more questions?
No, thank you.
All right, guys. I'll see you guys on Monday. I'll be trading live Monday morning at 6:30. All right, guys. Have a good weekend.
PT time? PT or yes?
Yeah, the Pacific time. So 9:30 your time. Are you Florida?
Okay. DC, but yeah.
Yeah.
Thank
East,
you.
yep. 6:30 Pacific, 9.
You're still recording, eh?
Yes, I will stop it right now. Yep. All right, guys. Later.
All right.
All right, bye.